Yes, we have very positive market momentum, but we also have a record order backlog of 138 billion. And looking at our future growth and what's embedded in our outlook for our wind business, not only for 26, but 28 and beyond, we never saw or had, let's say, a dependency on the US market.
A strong year for one of the world's biggest energy infrastructure companies, Siemens Energy. It reported profits of 1.7 billion euros for the fiscal year 2025, with growth in almost all sectors, but especially in its gas and grid-related businesses. Maria Ferrero is the company's chief financial officer, and she joins me now for more on those results. Maria, welcome. You know, we've done this interview a few times in the past, and to be honest, it's often followed a bit more disappointing results for Siemens Energy. In particular, you had a problem with your wind energy subsidiary, Siemens Gamesa, including materials prices, which were quite challenging at the time. This has been a much more positive year. To what do you credit that turnaround?
So first of all, thanks for having me. And yes, I'm really happy that we are well past the issues that we discussed last time. I mean, that relates back to 2023. When we look at fiscal year 25, we were able to do a number of things. We have a very positive market momentum behind us. So we continue to grow our order intake and hence our order backlog. So our order intake this year exceeded prior year by almost 20%. As a result of the very large, we have a record order backlog of 138 billion. And as a result of converting that into revenue, the team did a great job and also saw 15% growth in revenue this year to 39 billion. And of course, that translated into profit. We had almost 2.4 billion in profit, or 6% for the year for the group. And I think we were able to capitalize on the market momentum. We did a lot of hard work since we last spoke in terms of how we streamlined our operations, ensured that we got as efficient as possible. And of course, with respect to wind, we see a stabilization there in that last prior year or fiscal year 25 as they move their way on the road to break even in fiscal year 26. But again, all businesses showed tremendous growth in the year. And of course, that translated to an excellent profit and also, by the way, a very excellent cash at 4.5 billion for us.
I want to ask more about wind in just a moment, but first, your gas and grid businesses are doing especially well as electric demand grows in all markets, including for data centers. To what extent is Siemens Energy riding an AI wave?
I'm so pleased that you asked that question because I actually want to perhaps put a little bit of a water into the wine when it comes to the data center and what that means to us at Siemens Energy. I want to be clear. This is on top of the market momentum that I'm talking about. And when we think about the electricity demands globally with respect to data centers, right now it's around 2 to 3%. And of course, they want to grow that to 4 to 6%, let's say by the end of the decade or just into the next decade. But it is growth and we're happy to have it, but we're not dependent on it. I think what we're seeing and what we're experiencing, especially in our gas and grid business, is how do we continue to serve the electricity demands that continue to rise across all of the sectors, not just data centers, but all of them. And some of this is just our regular, if you'd like, business on where we see there's additional electricity demand and we, either, stabilize the grid, expand the grid, connect to countries, or in gas services, of course, we tend to see, new power plants, for example. But data centers is important, and I really want to ensure that I'm not stressing that it's not important, of course, and that growth is going to be a very nice growth, and we will participate in that growth. But this is on top, and I think it's really important for me to delineate that. It's not, by far, not the majority of our revenues or our order backlog.
Do you think then you're seeing that kind of hype around data centers built into your share price, which has more than doubled in fiscal year 2025?
Well, I would say it's a number of factors, and maybe data centers is one of them. But I think the primary factor is our turnaround case as a company and the ability to really show that we can stably, profitably grow. And that's across all of the businesses. And I think that's fundamentally what has caused our share price to increase. And by the way, we're very happy with that. And of course, the data center, let's say, is fueling some of that market momentum behind. But I wouldn't say that that's the only reason. I really say that it's really all comprehensive as to what we've done as a company. And we're very proud of it. And our broad portfolio, by the way, I shouldn't neglect to say that.
And this trend towards modernizing electric grids, generation of electricity, you see that continuing into the years ahead, I assume. You're projecting even higher margins in the coming few years. What's behind that projection?
Correct. Well, and maybe I go back to what I mentioned earlier, which is our order backlog. So we have very positive market momentum, but we also have a record order backlog of 138 billion. And this is maybe also with respect to data centers and some of the volatility you see there. We're actually, need I say, a very long cycle, almost, long project-based business. And so therefore, that's why I always talk about not only us growing our backlog, which is great, and it's across the board, but it's really about looking at that backlog with respect to longevity. So a lot of that goes into well beyond even our mid-year target range, but also in terms of its project margin and the quality of that project margin therein. So we actually have a lot of visibility, not only to this new fiscal year 26, but also beyond. And that's why I would say, when you look at what we are looking at with respect to our business, we do have a lot of stability due to the way our project business is embedded in our backlog. And of course, I shouldn't forget to talk about also our service, because service contracts actually go beyond, on average, 10 to 15 years in duration. And that's all embedded in that 138 billion.
To be clear, the service and maintenance of a lot of what you're building right now, modernized infrastructure, things like that. Very true. I want to sort of move in a different direction. We're in the middle of a major climate summit, COP30 right now, and we continue to hear more voices warning of a growing apathy in climate policies. I'm curious to what extent you see anything like policy apathy in terms of climate in your business and in your orders. You, of course, have a very important wind side.
Yes, absolutely. And I think, look, when it comes to, even looking at what we do in gas, right? I mean, we want the coal to X transition to occur. I mean, that's also very much embedded in some of, whether it's gas or whether it's stabilizing the grid, expanding the grid. All of these things contribute to, a greener environment, a greener energy mix. And again, and sometimes we get the question, do you continue to remain committed to your wind business? And we very clearly commit to the wind business in that for an energy transition to occur, you absolutely must have that wind business embedded. But also what we've said, Stephen, over and over, is that transition is going to take time. And right now, I would much rather ensure that you have gas turbines installed, ripping out coal, which we know has higher greenhouse gas emissions, and ensuring that we have high efficiency gas turbines in a particular plant, for example, that's hydrogen ready. And I think that's what makes our portfolio so special, is we have the full breadth and ensuring that, whatever speed the world wants to take, and we would love for it to accelerate into more green energy sources, but whatever speed is reasonable, let's do what makes sense and what's right now. And I think that's what our portfolio is allowing us to achieve with our customers.
That wind energy business seemingly becoming more difficult as markets diverge in what they want from wind energy. Siemens Energy warned last November about the incoming U.S. administration and its stance on wind projects. How has that come out in the books for you guys?
Yeah, excellent question, actually. Of course, it created some volatility there. But let me also be clear for us at Siemens Energy, and certainly in looking at our future growth and what's embedded in our outlook for our wind business, not only for 26, but 28 and beyond, we never saw or had, let's say, a dependency on the U.S. market as such. We have a number of contracts there with respect to offshore. Maybe I should be specific. With respect to offshore, we have a couple of projects that are in progress and will be finished soon. But with respect to future growth, we really see that here in Europe, in the UK, and other parts in Asia. And that's where we really see and base all of our targets on. So to your question of what's in the books. And with respect to the US, maybe just a comment. I mean, we have a large installed fleet of our onshore fleet there. And what we see and what the US certainly needs is more energy, more power. And so therefore, we see a lot of activity around refurbishing or repowering the onshore fleet that we have there in the US. And actually, those are really good deals. And I think then continue to contribute to the energy needs within the US. So just to clarify, that's how we see both offshore and onshore and the future of our business.
And your wind energy subsidiary, Siemens Gamesa, is reducing its losses. You're projecting a break even for the company next year. Is it finally out of the woods with all of the problems that were affecting it years ago? Quality issues, cost issues. How would you put it?
I would say last year certainly was a pivot year for Siemens Gamesa in that they were able to stabilize. I mean, they met their targets in terms of profit. They actually exceeded expectations with respect to revenue. And what's important about that is they are right now ramping up because they do have backlog, an offshore backlog. And this is where we see ramp up activities and therefore revenue being generated in the future from that offshore business. So yes, I would say it was a pivot year. Are there challenges? Yes. Do we remain committed to our customers with respect to all of those quality issues? Absolutely. And we're working through those in a very efficient manner. And the team has done a great job, not only of tackling those issues of yesterday, but certainly making sure that we're prepared for tomorrow. So again, yes, we remain committed in fiscal year 26 to break even. The team has the levers in place. Of course, there's always unforeseen, headwinds. For example, last year was the tariffs that also impacted our Siemens wind or Siemens Gamesa business. But certainly the team has the measures in place. They're all committed. We are committed to ensure that they have everything they need to get to that commitment of break even in fiscal year 26.
Yeah, Maria, speaking of tariffs, I wanted to wrap up by asking what other challenges lie ahead in this energy sector, especially when we look at decoupling trade or even supply challenges to rare earths, which is hitting a lot of industries.
Mm-hmm. Yeah, I mean, look, right now the market remains really positive. So demand far outstrips supply. So just generally, if you look at some of the growth rates in terms of macroeconomics, we are clearly outgrowing and outpacing due to the market momentum. So maybe, just to put that out as point number one. With respect to rare earths or supply chain issues, I mean, supply chain issues, that's not new for this year. This has occurred, as you know, and dates back a couple of years. And we have been very successful in diversifying our supply chain. We continue, and you can see that with respect to some of the capacity expansions we have. It's really local for local and ensuring that that diversification actually gets embedded in the country in which we're doing business. And of course, and last but not least, when it comes to rare earths, as you know, there's different classifications, and some of the restrictions are really on the heavy rare earths, which we do not need, nor do we utilize in any of our production processes. We do have light rare earths. That's with respect to our wind power business. And that is something that we've diversified in the last couple of years and have secured supply. And again, are not, subject to those major restrictions. So again, overall, there are tremendous opportunities in the market in which we are benefiting from today. And you see that, like I said, in the growth that we saw in fiscal year 26 in our guidance for 26, in our midterm targets for 2028, which have been uplifted. But I think that we're really well suited, and we've been addressing those and have learned how to handle those in the years before, and have at least tried everything we can to ensure that we're well set up for the future.
All right, that's Maria Ferrero, Chief Financial Officer with Siemens Energy. Maria, good to see you, and thank you so much.
Thank you. Take care. Bye-bye.